Gold just sold off on a bigger sell-off than it has in over a decade today. Now, the crazy part about this is that Chris Stradamus, yours truly, has been saying, I think the run-up in gold is over. And now today, this huge sell-off is happening. Now, receipts are all over YouTube, right? You can say, oh, this guy, Chris, with only 40% of his hair, he doesn't know what he's talking about. But I'll tell you one thing. I've been trading for 16 years, and I can see when something like this is getting a bit overstretched. I didn't know it's going to have a 10-year, decade type of move happen right here. But according to Yahoo Finance, gold tumbles in its biggest daily drop in over a decade. All right, let's pop into this real quick. Gold prices tumbled in their biggest daily drop in over 10 years as a stunning rally in precious metals came to a halt. They dropped as much as 5.5%. Now GLD is down over 6% at this point. Silver futures tumbled more than 7% to mark the largest daily drop. There's one other thing I highlighted here. You still have elevated inflation, you have low real interest rates, and you've got geopolitical concerns. You've got the US government dysfunction, and that's all a bullish cocktail for gold. So gold has been on this huge, beautiful, big run lately. And Outlier even had a buy signal that got up about 26% from the entry signal. I wouldn't be surprised at all if I had that sell signal come through. But what was my big reason for saying, you know what, I think the move is over? My big reason was right here. So this is a great website called apewisdom.io. If you ever want to find a stock where you're like, oh, I wonder what the masses, what normal people are looking at, here's where you go, right? And when I saw gold, of all things, being the top name on here, I was like, it's over. It's over. It's over. The story goes back to the shoe shine boy, right? If the shoe shine boy is telling you stock tips, that's probably the height, right? And we've all experienced this. We've all experienced this. Joe, you've probably met people in your life who don't know anything about the market, but when they know a stock, when they found that one stock, they'll be sure to tell you, and that happens to be the very top. Has that ever happened to you, Joe?
Yeah, very common, right? If you hear folks that don't really trade talking about stocks, it's probably too late. But you also hear those people sell at the bottom. So
Yep.
yeah, you really need to follow some good mentors, like Chris, for instance. Follow the Outlier University videos, get yourself educated, and give yourself a chance.
Yeah, for sure. And it doesn't take all that long. Like I know some people think that it's going to require, hours and hours and hours a day of analysis and whatnot. Honestly, it doesn't. Know what you're looking for. Find little things like this that give you a little bit of insight that you wouldn't see otherwise. And just check in on it every once in a while. I have a great story. My aunt, a couple years ago, maybe it was in 2022 when the market really sold off hard in 2022. I remember my dad calling me. He's like, your aunt's just real proud of herself. She decided to sell all of her stock today. And I looked at it and it was like the low of 2022. And I'm like, there you go. That's it. The low is in. And then of course it went up from there, right? I'm sure lots of people have been in that exact same position. His barber, Jeremy says his barber says that exact thing. Let's see. Actually, I have a slide for this. Hold tight. Let me open this. And I want to show you the slide that I'm talking about. Don't forget, I want you to register for the US Investing Championship. We as a team will be dominating the US Investing Championship. I can't wait for that. But this is the slide I was thinking about, right? The herd projection is gold's going to go up forever. So they buy at the very top. And then what happens? Oh no, it turns around. And then they're so scared and they're like, oh, it's only going to go down. Oh, and then they sell. And then that happens to be the bottom, right? You know what stock this reminds me of right now? I'm gonna get lots of hate in the comments for it. And you know where I'm going with this, Joe.
I do,
Chris
yeah.
made me sell my TOFI shares. These people who bought right here at the top have created this order block that has been hit over and over and over and over and over and over and over on SoFi. And then these people, oh, hang on. Wait, it wasn't AMD. There's another one that has a brilliant amount. It was Palantir. These people who bought at the top said, Palantir is only going to go to the moon. We are now like 17 hits or so on this right here. I feel like there was another one that had even more. Was it Tesla? Yes, it was Tesla. Even more, right? These people are these people. Exactly these people. They can't wait to sell as fast as they possibly can at break even. It is just human psychology at work. And you see it happen. I just showed you 3 perfect examples: Tesla, SoFi, and AMD. All 3 of these are happening. Oh no, AMD pushed through that. Palantir. 3 that are happening at this very moment. Now, like AMD, there can be something to push it through. That's not saying it's going to be a permanent overhead resistance, but who knows how long this is going to take. Rather than waiting and fighting and hoping and praying, why not just wait until like what was it? Google, I think it was, parked right on top of one right there, which ended that order block. Now it's down a little bit today, but still, that's exactly what I'd want to see. It killed that order block right there in its tracks. And now this could be a new setup forming here in Google. So I don't want you guys to get lost in a big trade up like this, right? Just follow your plan, because a lot of people are going to look at this trade and they're going to do exactly what happened on SoFi. They're going to buy at the top and then they're going to be like, "Oh no, SoFi, how could you go down on me?" Wait a minute. That didn't sound right. "Oh no, SoFi, how could you go down, comma, on me?" No, that still didn't sound right. I'm going to abandon that try, Joe. I'm not going to do it. I'm not going back there. "Oh no, Palantir, how could you go down?" I'm not doing it a third time. Fool me once, shame on me. Fool me twice, shame on me again. I should stop there. All right. So anyway, gold looking terrible. Gold looking terrible. Who knows? It could be. And listen, I'm always wrong. I love the YouTube trolls who come in and they're like, "Oh, this guy Chris doesn't know what he's talking about." Listen, you're exactly right. I'm a random guy on the internet. Don't listen to anything that I say. I'm going to tell you that a stock is trending down and it's going to go up. I'm going to tell you a stock is trending up and it's going to go down. So there you go. That's that is exactly what I'd want to get out of the way. So other than that, Joe, I want to welcome you and all of everybody who's watching to the Outlier Trading Room invitation only live stream. This is where we help you save time, make money, and start winning with less risk. So if you're watching the replay, go ahead and subscribe if you haven't already. Today, we're going to be putting Joe to the test. I'm going on vacation next week. I have a very sneaking suspicion that plans M and A are going to be setting up. So I kind of want Joe to run the show for the rest of what do we got? Today is Tuesday. For Tuesday, Wednesday, Thursday, I want Joe to be driving because I'm putting Joe in the hot seat here. Joe, you gotta earn that paycheck, buddy. All right. Listen, I'm putting my trust in you to find trades that I would be interested in trading. So even though we wouldn't trade anything today, I want you to run it the whole way through. Like pick one that comes through on the scanner and just run it all the way through, my friend. You ready?
All right, let's do it.
All right, let's make it happen. Where do we go next, Joe?
I personally go to Outlier and I look at the market.
All right, so let me go to the slide. You mean listening to what the market is telling us?
Oh, you know what? We need to reduce risk.
There we go.
That's what we have to do.
Yes. Oh, hang on. It doesn't look quite right on the Google slides. You can get access to this, by the way, over in our Discord. In the Outlier Trading Room plans, it's exactly this right here. It looks like there's a little bit of an issue on the formatting right behind there. So it doesn't come through with that issue on PowerPoint, but it looks like it did on Google Sheets. Yeah, we need to review our active trade exits, my friend, because the most important of the plan is planning on the plan. I go and plan. So we're in what right now?
Right now, we're in plan ETF.
Oh yeah, sweet. So now what?
Now we should look. I mean, at the moment, we're in TQQ, right? So we'll start at the top. We'll look for a triple Q sell signal.
Now we're talking. All right, let's go back to QQQ. How will Joe ever be able to fill the hands? Because he definitely could fill. I don't know. I'd totally botch that. Pointing us, I have tiny hands. Thanks a lot.
All right. So
Professional YouTube channel. Professional YouTube channel.
in the middle of the screen towards the right, we have stock details, and we see these great big green letters that say buy. That is a buy signal indicator. We can also see it in the Outlier 9. We've got a good green box here with a signal, green. So again, QQQ has a buy signal. We can also see it on the chart right under Chris's mouse. There's a big
Boom.
B with a green box around it. So we are certainly confirmed that triple Qs has a buy signal. So we wouldn't be getting out based on this, right? We don't have a sell signal. We have a buy signal. So then we go to the next box. Does triple Qs have a 10-20 bearish cross?
Let's go look. No.
No, because the blue line is over the black line. So we are still bullish.
Good to go.
30-day order block hit. So now we got to go back to trading view and we look to see if there are any order blocks. So if there was an order block, there would be a big greenish, purplish box right above the price today. And we can see that there isn't one. So
There
we
you
don't have
go.
that signal either.
Now, one
Now,
thing, little note on here is we have found that if it's under 30 days on plan TQ or on plan ETF only, that you don't have to worry about it. If it's on plan M, it'll be a little bit different, plan A a little bit different. But on plan ETF, 30 days is the and that's 30 trading days. That is the exit signal there, right? So if it's like 7 days old, a few days old, like this one right here, you could ignore it. And that's a perfect example of when it blew right past one, right? Because those people are not the ones who have been holding it for months, like Palantir, right? Going back months, like Tesla, going back to December of 2024, right? So a very young order block, don't worry about it. It's the ones that are a little bit older that matter. All right, go.
now, if instead of trading TQQQ, you had traded SPXL based on SPY signals, you would just repeat that same process for these three boxes. You would just reference SPY and take those same questions in your mind.
There you go. Perfect. All right, Joe. Now we go see what is the market telling us.
All right. So first, we're going to look for a SPY bullish trend. So we're going to go to TradingView for this or Outlier. They'll both show you the same thing.
Let's go to
We
Outlier.
are, yeah, let's do it.
We're going to need it anyway. Let's go over here.
Hmm.
All right. We are in Outlier on SPY.
Yep. So we're going to follow these trend lines. So again, your 10 is the blue line. It is over top of the 20, which is the black line. All of those are over top of the 50, which is the red line. So you are in a bullish trend. You also have a green background in Outlier. Green background tells you you're in a bullish trend.
There you go. That makes it way too easy. Makes it way
Yeah.
too easy, right? I mean, it's so easy that you would expect a platform like this to cost thousands of dollars, but it's only 82% or 82 cents a day. That's 64% off the regular monthly price. So I'm just saying, it's a great deal.
Yeah. And
All
if
right.
you need another confirmation, you could look at the Outlier 9 in the top right of the screen and you'll find a green box under trend.
Very good. All right, Joe. Next.
Now we need to look at the SPY signal. Is Outlier recommending a buy on the SPY?
Oh,
So
shit.
yeah, look at that. We got a B. We got a green B. We
That
also
came through
have,
today.
yeah, just today. Also have again in the Outlier 9 section at the top right, we've got the green box buy signal for the stock. And in stock details, we've got the green buy word. So definitely Outliers recommending a buy on the SPY.
Mm-hmm.
And then we need to look at the SPY fear and greed heat map. It needs to be under 70 and rising. This is the first trending graph here. You can see under Chris's mouse. In this case, the last few days have been trending down. If you visually can't see it, you can look at the numbers over on the left-hand side of the screen. Most recently, it is still going down. It is under 70, but it's trending down.
Yep.
What did our
Agree.
signal say? What did our signal say? It needed to be rising. So that's the opposite of what we have today.
Yep. And then
Then,
let's go for fun. The
mhm.
last step.
Yep, final step, full stocks breath. We're looking for a bullish cross on the 10 EMA. So, in case you didn't see it, because Chris is a really fast clicker, he went to the top right, look for a little graph symbol with an arrow on it, and then that's going to take him to the market breath page. You know that the screen is correct at the moment because you just went to the screen. But if you clicked on anything on the screen, you want to make sure you're looking at full stocks. So I like to click right under Chris's mouse and I choose full stocks just to make sure.
You can also choose it on the left-hand side right here.
Yep.
And I really like this left-hand side. Like at a glance, you can see what sectors are doing really well. as far as like the breadth goes.
Mhm.
So continue on, Joe. You're doing great.
Yeah, and
Everybody
the
give Joe some love in the chat. Way to go, Joe.
thanks everybody. And then the last little tidbit that I like to do that Chris kind of blew through there is he moved the slider at the all the way at the bottom of the screen. He moved that over to the right, and that allows you to zoom in and get a real good view at the last few days of the trend of the market breadth. So what the signal is asking us is, what is that green line doing? The green line needs to be above the yellow orange line. That orange line is the 20 EMA. Once that green line is above that orange line, you're in a bullish trend. Um, so, if that's what we're looking for, that's not what we're seeing. So
It's
we don't
close.
have that signal today. But boy, yeah, it's close. This
It's
week,
really close.
this week really is looking good.
Yeah, that's what I'm saying. Like, and that's why I was like, you know what? I need to have this conversation with Joe ahead of time. My wingman Joe to let me know if anything's going to pull through because I could see it. Right.
Yeah.
Um, this is going to cross tomorrow. I have no doubt that it will cross tomorrow. Also,
Mhm.
notice here, Joe, we got more uptrends and less downtrends today as well. So that would be a donkey channel score of 2, my friend. And if you
Yeah.
get a market score of 2, it doesn't matter what the sector is. Doesn't matter what the sector is. So that's great. That's what we want to see.
Yeah, and
So
I did. I think I misspoke. That orange line, that's the 10 EMA, not the
it
20.
is the 10 EMA. Yeah, you said 20, but I was going to let it fly. So let's go. Hang on. I keep going back to that. Let's go back to this Google Slides one. We have, this will be good. I'm very confident this will be crossed over tomorrow. This may happen tomorrow as well. It's very, very, very possible that we could be all the way set up on the market by tomorrow. That is super exciting, Joe. Super exciting because that's going to let us go to plan M, which is our most profitable plan. It's plan M for money, baby.
Yeah.
So what we want to do at this point, even though we aren't going to trade, is let's imagine if we were. And Joe, I want you to get me all the way through picking out an option at this point. Does that sound good?
Yeah, let's do it. So, I guess a little side note here. The other reason Plan M is important to catch is because there's not a lot of opportunities to trade Plan M. So, if we look at the expectancy, I think there was only 93 days in 5 years, right? So, if this is our most profitable plan, you really want to try not to miss it if you're going to try to trade it.
Yeah. And look, it can happen, right? One of the Market Wizard books I read talked about how somebody missed the Cook brothers in the 80s. They cornered the silver market before my time. But this one particular Market Wizard, the story was that he had family in town, and it was like the one day of the year that he would have gotten his a signal right before the big cornering of the silver market, which of course he could have gotten later, right? But he missed his signal. He followed his plan, and like that haunted him for decades after that point, right? It's like, I can't believe I missed that trade. My freaking family, my in-laws, ruining my life because they decided to show up today.
Yeah.
Yeah, I
I
don't
mean,
want
the
that to
thing
happen when I'm hanging out with Mickey Mouse. You know what I mean?
Yeah. The thing is, there's always something to trade.
Mhm.
It's, what is your personal plan telling you? What are the signals telling you? We do have a question real quick from Dustin. Why are we not in Plan M today? And we kind of went through it quick. The reason we're not in is because we're going through the market on the left. We do not have the SPY fear and greed heat map signal. It is trending down, not rising. We also don't have that bullish cross on a 10 EMA. So those
Yeah,
two signals are not lit up for us
yeah,
today. But tomorrow or the next day or the day after
I
that,
can
they
totally
might
see
be.
it. I could totally see it in a couple days. And I
Yeah.
see as a great point here, right? Even though it's not fitting my plan, there's still plenty of setups out there for you in any sector, right? There's going to be lots of setups for you. And the key here is creating your plan and following that plan. And Joe is going to help me out by showing me what's going to be working on my plan when I'm not going to be able to sit there on my computer, right? So that is one thing I want you to always keep in mind. What I'm showing you right here is the plan that we at Outlier have developed based on all the signals. We have a whole team of people that have created the signals, and then we built a trading plan around those signals. Okay. Does that mean this is the most profitable way to trade it? No, of course not. But it is a very profitable way, very repeatable way to trade it. And that's why we're going to do it. All right. So, great question from Gina. I'm actually really glad she asked this. Why are some boxes shaded blue and some white? The white shaded boxes are outlier 9. You like that, right? So, for example, the trend of the SPY is right there. The buy signal of the SPY, right there. The breadth is right there. However, in plan M, we have one more element that is not part of outlier 9, and that's why it's right there. Pretty cool, right? Pretty cool. All right, so Joe, let's move on. We've already
Yeah.
established that the market's good to go. We've
Hmm.
already looked at all these pieces here. You're doing a great job. Now let's move into the sector.
Yeah, awesome. So, my personal method on sectors is I go back to that market breadth sheet, and I just have a glance and see what sectors are positive, what bullish, which are bearish. Um, the next thing I do is I typically go to the screener, and I run the screener on all of the sectors except healthcare because we don't care about healthcare.
Oh, hang on. I must have I must have checked off technology at some point. I didn't mean to do that. Let me go to everything but healthcare. Screw that guy. Apply filter. All right.
So
So
then,
now
mhm.
we're going to see all kinds of new opportunities coming through here. And we want to go back at least 5 days. So October 21st is today. 5 trading days, 1, 2, 3, 4, 5 gets us to the 14th. So we can load a little bit more. All right. So now we're down to the 13th or so. Okay, cool. Joe, I hope you're going to shortcut things because this is awesome.
Yeah, I like to run the big, beautiful Bookmarklet version 6.5.
Yes. Okay. So what Joe is referring to is something that one of our absolutely brilliant outliers came up with. Let me find it. It was here. Testing new strategies. Um, it is a bookmarklet, and we'll show you how to run it. It's saved in testing new strategies. However, I want to add this to member contributions real quick. I'll put this over member contributions because it's so good. Okay. So in member contributions, you can access this bookmarklet as well. Oh, wait a minute. Sections, but I put it in the wrong spot. Hang on. Deep Thought is going to hurt me because he made the Discord so much easier. Why can I not see FAQ and member contributions? I don't know why I can't see that there. Okay. Either way, here it is. It needs to go here. I don't know how to put it there. Can someone help me with this? Somebody please do that for me because that is above my pay grade. So back over to what Joe is talking about. Backlab has built the big, beautiful bookmarklet, which is going to allow us to actually take a lot of these steps and condense them down into pretty much one click. It's so sick. At some point in the future, this will be built into the scanner. But in the meantime, watch and learn. Watch this. You ready, Joe? I'm so like this blows my mind. So all you have to do is take VacLab's code. Now listen, this is not a official outlier code, so we can't service it. So if you have issues with it, let VacLab know. And then all you got to do is download the TXT file. And then when you come onto the screener page, you're just going to save it as if it's a bookmark and then replace the link with the bookmarklet link. And that's it. It's actually really, really easy.
Hmm. Yeah, you just replace the text in the URL with the text that's inside that text file. So it's wicked easy.
Yep. That's it. It's really, really cool. And
Mm.
then what pulls through is amazing. And so, Joe, what I'd like you to do, even though we have all the data in front of us, is let's talk about each one of these as we go through it. Sound good?
Yeah, let's do it. Sector fear and greed heat map rising. So
So,
on the left-hand side, in the middle, we have all the sectors, even that bully, the healthcare sector, which according to backtesting tells us not to trade healthcare. That's the answer to someone's questions who posted it. So we are looking in the heat map section under Chris's mouse here for the green numbers. Each sector will be moving up or moving down. So we can see the words moving up or moving down right here. Again, we're looking for the ones that are moving up, but if I remember what the signal said, under 70. In this case, every one of these is under 70. So I'm thinking that signal is a go.
Yep, there you go. Now, like I say, even though this is using Vaclav's Bookmarklet, who he is a Trojan horsing everyone. Who said that? That was really funny. I'm going to give you credit. Vaclav is installing Trojan horses on everyone's PC. Yes, even though Vaclav is stealing all of our identities as we speak, we are building this into Outlier right now. I couldn't tell you the date when this is going to come through, but I do believe this is in the upgrade that's coming here in the next couple of weeks when we're adding 6,000 stocks and ETFs into the platform. 6,000. We cover 2,600 now. We're more than tripling, we're quadrupling in that point, nearly quintupling how many stocks are going to be inside of Outlier. So it's going to be awesome. And this, it's not going to look exactly like this, at least to start, and we can modify along the way to improve it. But this is a huge template that we have used for it. Now, to Joe's point, sector fear and greed heat map. All of the heat maps are under 70. Now you can look at these individually, just like we did on the SPY, right? But it's way faster to look at a grouping of them rather than having to go into, okay, let's go to XLC, then XLY, then XLE. And if you want to see additional data, all you got to do is pop this down and it'll show you the heat maps, right? So here's XLC. Actually, the average heat map score is at 47.3, meaning that the XLC, the constituents of XLC, are on average fearful. 47 score out of 100. Now, you're probably thinking, it's communicated. Who cares about communications? Netflix is in there. Meta is in there. There are big names in the communication sector, right? So don't discard anything. Don't discard anything. And again, you can access everything, including our Discord, even though I'm not a professional Discorder and I don't know how to move that over to the FAQ and member section for literally just 82 cents a day. So, Joe, continue on, my friend. We've decided that pretty much everything is under 70. Everything is under 70. Many of these are moving up. So we would be, if we were looking to trade, we'd be looking at sectors like communications, discretionary. Amazon and Tesla are in discretionary, right? Not everything is a tech stock. I know most people think everything's tech. Everything is not tech. You've got some industrials moving up, and then real estate, staples, tech, and utilities. All right, continue on, my friend.
Okay, the next signal is sector relative greed. Let's go. There we go. So we have a whole column for relative greed here. But what that means is the sector itself should be running like gangbusters. Its fear and greed should be higher than the SPY fear and greed. We can see at the top of the screen, the SPY fear and greed is 59.81. So we would be looking for a sector who is 59.82 or more, meaning it is relatively more greedy than the SPY.
There you go. Now, I think that's super important, right? Like there have been plenty of times where you found a sector that is just running hot. Everything in that sector is printing money all day, every day. That's what we're looking for. How greedy are the sectors? And in fact, this was one of the biggest drivers of the expectancy that we looked at. One of the biggest was how greedy that sector was. Is it greedier than the market? If so, let's take a look at it. A couple questions here from John Joseph, my friend. I got you. What's the most important between signal return and capital efficiency? Okay, great question. Let's go to the SPY here and let's discuss what these are. So in the SPY, it has a capital efficiency of 1.86. Signal return on Outlier is 135%. Buy and hold is 111%. It's a great question, John Joseph. Let's break it down. So you're looking at these and you're like, well, it's outperformed a little bit. But looking at over here, you can get, or in this back test, it had 135% return, yet it was only in the market for 66% of the time. Meaning the other 34% of the time, it was out of the market. Buy signals only, go to cash otherwise. And then what that means is it outperformed the market while being in the market for less time. Therefore, the capital efficiency means for each day that you would have been invested, it performed 1.86x as well as buy and hold. So nearly twice the return on a daily basis. That's what that's trying to measure. So, what is more important was the question? That's up to you. For me, I don't put capital efficiency as part of my trading plan. That's just because all I'm looking for is finding an opportunity with a positive signal return, right? If it has a positive signal return, I know that the outlier signals are going to be great. Now, that doesn't mean every time that's going to be a winner. We're never going to give you 100% win rates, unfortunately. But you can see right here, I think this is a perfect example, Joe. CLS, a 1,357% return, but capital efficiency is only 1.01, right? So if you had a filter that said, give me a capital efficiency 2 or greater, you can still make some great bucks, even though capital efficiency isn't all that high. Or this one over here, UEC, you can still make some great bucks, even though capital efficiency isn't all that high. So personally, I go with signal return, but capital efficiency is there to let you know, if you were just buying and holding the stock, you actually could have outperformed it right here by 3x. Every day that you were in, you could have been 3x higher than you would be just buy and hold. So it's a great question from John Joseph. Let's keep going.
All right. What's our next signal, Chris?
Well, we talked about sector relative greed, and we have one, so utilities. So lead me down the path of utilities. How's that sound?
All right, let's do it. So
Sector breadth, we already
Mhm.
talked about. Wait, did we talk about sector? No, we didn't. I'll shut
I
up.
don't
I'll let you talk.
Yeah, I don't think we did. So the way I would get into sector breadth is I would middle click on a stock that has the utilities as its sector.
Actually, Joe, I can make it even easier for you.
Sweet. How do you do
Over
it?
here, click the down arrow.
Oh yeah.
It'll show you that heat map value. Then it'll also show you the breadth.
Okay, awesome. So we're back to that green over orange bit. So if the
Yes.
green line is over the 10 EMA, which is that orange line, you are in a bullish trend.
There you go. So sector breadth looks great on utilities. Let's keep it going. What are these outlier channels, Joe? Some people call them donkey channels. What is an outlier channel?
These are indications that you have more stocks with buy signals or less stocks with sell signals today than yesterday, if I understand it correctly.
It's actually uptrends versus downtrends.
Okay.
Yep. So let's break that down. So when it's green, so what we tried to do is make it so it made obvious sense, right? Because looking with your eyeballs, you can see right here we're getting less uptrends, right? And we're getting more downtrends. We can see that with our eyeballs. So what we do is we codified this and we said, okay, we want to make it as easy as possible. So if it is pushing up and we see more uptrends, then we're going to make it green. We're going to highlight it green. And if we see this pushing up, meaning less downtrends, we're going to show this as red. So if you find a sector that has 2 right here, that'd be a score of 2. But today you have a score of 0. But does that matter today, Joe? Right. So here we have outlier channel numbers here. If we had a market of 1 or greater and a sector of 1 or greater, that would fall into M1S1, market 1, sector 1. If you remember, we actually had the market at 2. We had a market at 2, which means it doesn't matter what the sector is. Market 2, take any sector. Take any sector. So even though this has a score of 0, we can still trade it. We can still trade it. Joe, we're pushing through on utilities, my friend.
All right.
Look at this. Utilities lit up. Fear and greed is good. It's under 70 and rising. Relative greed is good. Sector breadth is good. And we got a score of M2 on the outlier channel. All right. Let's do this. Let's do this.
So now
What's next?
I would go back to that screener and I would choose only the utilities sector stocks.
That would make your life a lot easier, wouldn't it?
Mm-hmm.
All right. So I like that idea. Let's go back over here and do only utilities and hit apply. And we'll go back to the 14th. Okay, so we've already loaded up to the 14th. And we actually have some that still would apply, Joe. Let's move on to here. Now, in my screener, and yours can be different, I'm looking for a positive backtest, bullish sector breadth, greater than 1 million shares average daily volume, a buy signal, all market caps. I want at least $10 on the stock price. It used to be 20, not as much of a snob. The heat map being from 0 to 90, meaning, in fact, I may need to take that off. I may need to connect with with Scott to confirm if that's still a boundary I need to work on. Actually, we'll keep that for now. Heat map moving up and a green overlay. And a green overlay, meaning it has a bullish trend going in. And then we can look at the individual stocks. So, Joe, we have 2 stocks that are within the last 5 days that pass through the screener. So let's go through those.
All right. So bullish stock trend 10 over 20, price over 50. So if you go back to your screener, you can middle click on the stock itself.
Let's do that. Let's pull up both of these guys. And let's start with EIX.
All right. So back to the lines. We got a blue line, which is your 10. It's over top of the black line, which is your 20. Both of those are over that red line, which is a 50. So you are in a bullish trend on this stock.
Yep.
Does it have a buy signal? We can head over to Outlier for that. It does. You know it does because you have 3 different locations we've gone over 4 times that all say buy.
Good there.
The stock fear and greed heat map, any value and rising. So we'll go back to Outlier. We'll look at the graph in the middle and we're looking for an uptrend. And
Oh,
we do.
there it was right there. There it is right there. I do need to adjust my screener. Any value and rising. Hang on. This is a live adjustment. That needs to go away. I knew that was a thing that needed to go away. Hold on. Let me do this on. I knew that when we ran through our back test, that was a thing. Okay, cool. That feels good. That feels real good, Joe. Okay. Back over to here. Sorry. Keep on going, my friend. Any value in rising. It's currently at 58.55 and rising. Looking good.
Yeah. All right. So now we're at order blocks. So does this stock have any order blocks within 2% of the current price?
Well, Outlier is showing one, but let's verify on TradingView, EIX. And it looks like Outlier is collecting one for some reason, or connecting one that is actually past it. So I think we're good.
Yep, it looks like we're good.
I think.
But the point here is, if there was, you can use the measurement tool on the left. Looks like a ruler. You can click on that ruler, and then you can find today's price.
Oh, hang on. I'll just do. What are you trying to do, Joe? I don't know. Oh, you're trying to measure.
Yeah, measure the order block. So, yep, you can just measure it right there, and it'll give you the percentage. You just want that percentage to be 2% or more from the current price.
Yeah, so it gives you room to run.
Mm-hmm.
Okay, so
what's our signal?
We are
price
all the way down here.
Price over the 10. We already checked that one. Price is over the 10. And the price is greater than $10. So now we're into options. We got to go look at the options chain.
Okay.
So you open up your favorite broker and go to the options chain.
There we go. EIX. Hey, look, it's working today.
All right. Okay.
Hey, Stocky Roxy says he's loving this. Now, there was method to my madness here. First, selfishly, I want to make sure that Joe, in fact, I want to check your charts later on offline to make sure that all of your stuff's the same as mine. But selfishly, I wanted Joe to make sure that he knew everything. That way, when he hands it over to me, I feel very confident in him. And second, everybody who's watching can learn specifically, exactly, step by step how to run Plan M. Pretty cool, right? Pretty cool. All right, let's keep going.
Okay, so EIX, now we're looking at contracts. We want the contract cost to be $10 or more. So we're going to look in the ask column.
Well, hang on. We don't want the contract cost to be $10 or more.
Price greater than 10 for options available. Okay.
That's just the underlying price greater than $10.
Oh, we should clarify that in the sheet.
Okay, stock price. There. You happy now, Joe?
I am much happier now.
Let's move into the options liquidity criteria slide. This is what we need right now.
Okay, so start at 21 days until expiration. So that means we're going to give 3 weeks to run for this contract before we technically are forced to make a decision.
Ooh, hang on. Dulles loan or D Osloan, or hang on, how many different ways can I say this? So Dulles loan, Dole's loan. Listen, I'm from Texas. I can say it all kinds of different ways. I tell you what, uh, uh, D Olas Loan. Anyway, great point. We do have earnings right here, and that's okay. I have no issues running up into earnings, not at all. Reason being is that this is actually one of the best trades you could ever come across. If it's in a bullish trend, running up into earnings, people get really, really excited. It's got no overhead resistance right here. I would love to trade this. Absolutely. Let's keep going. But it was
Just
a really
don't
good one.
hold. You may choose not to hold over earnings, but
Oh yeah,
trading
I would
into earnings.
absolutely get out.
Yeah, exactly.
That is my rule.
Hmm.
The monkey hammer is waiting.
Okay, so we need to get our screen looking at the right expiration. So we go back to the options chain, and we start at 21 days until expiration.
So it
So
looks like they only have monthlies, and that's okay. No
okay,
issues there.
so we'll just pick the let's see, your broker's different than mine. We'd pick the November 24th because that's 31 days out.
Mm-hmm.
Okay, what's our next criteria here?
Got to go back and forth between these.
Yeah. 250 or more open interest. We simply need to be able to get out of this if we need to get out of this without losing our shirt, right? So we're looking at the OI column, that's open interest, and we're looking for 250 or more at approximately the 80 delta. We can see there's a 73, so we could run the numbers on the 73. We've got 671 open interest right here on the 73 delta. So
Yep.
I personally would run the numbers and see if I like them.
All right. So let's keep going.
Yep.
The next
So
step is
bid ask spread. Again, if we get into this, we want to know we can get out without losing our shirt. So we want the bid and the ask price to be pretty close to each other. So we're setting in this case it's 30 cents. So you do 450 minus 420, you get 30 cents.
30
So
cents.
you're
No issues
less
there.
so you're less than 50. So we're still good.
All right. Now,
30%. Mhm.
this is a rule that I wanted to clarify, and that's why I put it in here as saying 30% is the absolute max that I'd be willing to pay on extrinsic value. And we'll calculate that in just a moment. Generally, I want to see it at 20% or less, but I will fudge it out to 29.9%. If it's 30% or greater, I will not trade it. Will not trade it. So let's keep going here. Well, we're running the numbers right now, David. That's what we're doing, my friend. Let's keep going.
Mhm. So now we're
So if we were
into
to do this one,
extrinsic cost. So the cost that goes to zero every single time. We want that to be less than 30%. So you're going to do, what is it, $1.11 divided by 450, if I remember right. So that came out to be 24.67%. So you're
that
under 30.
works. That works. And
So again,
so I believe,
if we did that too quick, it is your extrinsic cost divided by your ask price.
right. So your extrinsic cost, which is the part of the option that will decay, and you divide it by your ask price. And so 24% of the option will decay. Now, generally, this puts us around the 80 delta. And this one came in at the 73 delta. No problem. That's totally fine, right? It can be more than 80, it can be at 80, it can be less than 80. What we're trying to get are those characteristics. Plenty of open interest, bid ask spread being tight, and extrinsic value being low. That's what we're looking for. So, Joe, you led us all the way to this stock right here. So at that point, Joe would text me and say, "Hey, I like EIX November 21st, 55 calls.
Mhm.
Roughly, you could just tell me roughly $4.50." Then I would take that, I plug it into my position size calculator because that's going to tell me how many contracts to buy. And it's going to give me an approximation of how much of my portfolio it would take. Then I'm going to go and I'm going to put that order in and I'm going to go put it in for a penny. And then later on in the day, Joe's going to give me a go, no go. And I'm just going to say, go make it happen. I'll adjust my price. Boom. And we're in. So that is my plan for when I'm on vacation. I'm going to rely on my wingman, Joe. The wingman. Joe, we need a song about you being the wingman.
We do need. Our song creators. Let's get that done. Here's your request for the day.
That's right. You know what? John Joseph brings up another great point here. John Joseph, how about the exit? No, he's totally right. He's totally right. So let's cover the exits. So we're going to go to a plan M exit signals right here. So the exits, right? It seems like a lot, but it's really not. All right. Sell signal and outlier, that'll take you 1 second to check. A 1020 cross, that'll take you 1 second to check. If it runs into an outlier block that's 120 days old or older, it'll take you 1 second to check. And honestly, I could do this from my phone, so I'm not stressed on that. Earnings, we've already established that earnings will be happening on this date right here. So I'd probably set a reminder because that's on Tuesday. I would be on vacation on that day and say I want to get out Monday night. If there's a gap in crap where a gap's up between now and earnings, right? Not including earnings, but between now and earnings, if a gap's up 5% and then comes back down and closes under the low of that candle, I'd be ready to get out. We also have a stop loss at 2 ATRs and a 3 ATR midday emergency exit. I could set an alert on my phone if I needed to. But honestly, all of this can be done sitting, at the table with your family, scrolling on your phone for a couple minutes while you're trying to recover from the brutal Orlando heat. You could say, okay, none of my exit signals are hit. I'm good to go. That's it. So what do you think, Joe? You think we can do it?
Yeah, I think the next thing I would do is mark up my chart so that you know where your 2 ATR stop is and where your emergency exit is and that sort of thing. And it really helps with your trade logging in the future as well. So
for sure. Yeah, and I've got a little cheat code over here that does all that for me. Not that I could do it from my computer, but I just come through if I were sitting here and just fill it in like this. Right now, again, this is just crispy and lazy. I used to do all this manually, if you can believe it. I would go through and calculate, plus 1 ATR, plus 2 ATR. But now with handy Pine scripts, basically it's all done for me, and I just got to click a handful of buttons, just like that. I can turn that off, and I know all my levels. Boom.
Awesome. So for folks who want to do it manually to really understand the process, you're going to need the blue bar at the bottom, that ATR. That's your average true range. That tells you the price that the stock is moving over the last, if you use standard period, it's 14 days. So if you need the -2 ATR stop, you're going to take the value of that blue bar, which I can't see it on the screen, but you're going to multiply.
$1.47.
There we go. So you take your current price and you subtract 2 times the ATR. So 2 times
1.47 times 2, and subtract it from the current price. 55.44 will get you that stop loss right there.
Then you
can subtract another $1.47, and that gets you your emergency exit, 56.91. Now, couple things you'd want to know, right? How often have the emergency exits been hit? I don't remember off the top of my head. I believe we might have that in the backtesting data. Let me double check it here. Plan and backtesting data. So the average max drawdown. So on average, over 7,000 trades, the winners had a pullback of just 0.4 on ATR. So less than a half ATR before they went on to run and be big winners. The losers on average had a 1.5 ATR drawdown and ended up being losers. Okay. The max move up on average was 3 ATRs. 3 ATRs on average, Joe. On average, Joe, could you imagine if every winning trade that we put on average, we're rolling it 3 times? Oh my gosh, I can't wait to run Plan M. This is why I'm so excited about it. This is why I don't want to miss Plan M, okay? The average win, 7.3-ish. The average loss, 4.4-ish% with a 57% win rate. That is huge. I know you're probably thinking 57% win rate. That's not that big. 57% win rate. When your win is nearly 2x, let's call it 1.7x, what your average loss is tremendous. That is why the expectancy here is such a positive 2.25% before leverage. Before leverage. Now, what I want to do real quick, we'll end on this. Let's say that EIX went up 2.25%. Okay. So let's measure this 2.25% to here. Now, also baked in this backtest is getting out before earnings, getting out before earnings. Okay. So this would be included, right? This could absolutely be a potential reality here. It didn't go up all the way to one ATR rolling point, but the expectancy came out to be 2.25%. Of course, the ATR is going to change on every stock. It's even going to change month to month on the same stock. So 2.25%, that'd be going up one. Let's do some Excel over here. This is going to be fun. I'm looking forward to this. So let's say that it goes up $1.34, $1.34. Okay, 1.34. Our delta that we started with was 73. So if we do this times 0.73, no, that is not what I said, equals this times 0.73 gets us 97 cents. So for every dollar that this goes up, we would go up 97 cents here. Okay, so that would be the amount of gain that we could make on average on this particular stock. Now you're probably like, man, 97 cents, that's not all that much. How much did we buy it for, Joe? We bought it for, let's call it 450, I think is what it was. So 97, so 450, we divide 97 cents divided by 450, that would be a 21% return. A 21% return. I'm not saying that that's going to happen. What I'm saying is if we use the average numbers here on this particular trade, 22% would be what the average outcome would be. Not 2%, not 2.25%, 22%. Coincidentally, about 10x as high. That wasn't 21.74. Yeah, pretty sick. Now, again, that does not mean it is guaranteed. That does not mean that it's going to happen. All that means is on average, using our backtest right here, there's no more trust me, bros. This is the data that we have. Based on that data, that could be the outcome. Pretty cool, right?
Absolutely. 22% on a single trade. I mean, it takes years to do that with the SPY. So
That's not
if you can,
normal.
if your trading plan allows you to do that, folks, you're in pretty good shape.
Yeah, that is not normal at all. Not in the least is that normal. And it's also not normal that we would charge such a low price, right? 82 cents a day to get you into Outlier, the full access, which includes all of my trades, all of everything in the Discord, and full access to the software. There are no tier plans. It's one price, 82 cents a day for the annual pass, and you're in. So listen, Joe, thank you so much for running this today. We jumped off on gold and we ended in the utilities with a potential fantastic setup here. Now, again, I didn't take this trade because the market wasn't set up, but I absolutely could see this happening as soon as tomorrow. As soon as tomorrow.
Yeah, this is exciting. Being able to do Plan M, put that into action. The expectancy looks great. I'm sure there's going to be some signals coming up for us here, so I'm excited.
Yeah, I'm very excited. Joe, thanks again for coming, my friend. Hey, if somebody were looking to save time, make money, and start winning with less risk, what should they do?
I would subscribe to Outlier, but you can start by learning more about Outlier by clicking one of these videos.
Jeez, it's almost like we pay this guy, and we don't.
You know.
Joe, thanks for coming. We'll talk to y'all soon.